I think you're muted, Victor.
Yes, you're right. Sorry about that. Good evening, everybody. Well, it's not evening. It's evening for me. Um, good, good afternoon, everyone. Welcome to another live trading session. Today is February 23rd. We're gonna put on some new trades and check what's going on in our account. And then after that, we're gonna go straight into mastermind session with the Discord members, and we'll talk about MAR ratio, drawdowns, and things of that nature. So hope everybody's doing fine today. The market is relentless, as everybody knows. I'm sure some of your GTC orders have been firing left and right, as obviously there was a huge move yesterday. We're still up today, even though at the moment it looks like we are a little bit down, but that's all fine. Let's take a look at the account. So just actually, let me just show you here, just so you understand the new netlick is a little bit higher. Somebody is not on mute, guys. Can I just ask you to?
So $5 at the money put spread depends on whether you want to be in the earning cycle or not.
Okay, now everybody's on mute. Okay. Netlick is at 65,431. That's not all pure profit. I added a little bit of money. I think just under 10,000. 96.52 hit the account yesterday. So when you take that out, it's actually 55, as you can see right here, 55,777. But we'll adjust that in our performance sheet to make sure that it's accounted for properly. But I wanted to put it here so that the next trade is properly calculated, the date when we need to do it. Okay, so let's take a look at what we're gonna do. Since the last tweak, few days ago, that I think everybody knows that we moved the delta a little bit higher to 11, 12 instead of 8, 9. We are collecting more premium, and that forces us to either reduce the frequency of the of trades or change the instrument, for example, going from ES to MES, and we know that there is a little bit of extra cost involved with the commissions and fees. But I want to do a little bit more frequent trading, so I'm going to stick with the MES just for the time being. And as a matter of fact, once I moved from ES to MES, it doesn't really matter if I do 3 MES trades or a 5 MES. The commissions are the same. So I might do a 3 MES with 1 put debit spread, and then get 2 or 3 trading days per week. It's all the same once you account for the commissions, once you start doing MESs. And I like to be able to trade a little bit more often, because if I do an ES trade right now, it would give me probably the next trade in more than a week, and that's not what I want. So let's see. The metrics are here. I put them in. So VIX is at 14, Delta 58, Theta 27, buying power very low at 10.7, and we're perfectly in line to put another trade. And just here to bring your attention, I just lowered this PCR to 26, both because of the move to a little bit higher delta and move to MES, and due to a little bit higher commissions, there's probably slightly less PCR. So I just wanted to account for that. And somebody says, Saurav says, maybe better averaging to in small M instrument. Yes, absolutely. I do like the higher frequency, help us smooth out the equity curve, and that's pretty good. So yeah, you're right. Everything else is the same, except for the yearly hedge allocation. I increased that a little bit. And at minus, JT says he's at minus 30 delta. Are you saying you're in your account, you're minus 30 delta? Portfolio? Okay, so I'm assuming you have some hedges on to bring you there. So, okay, that's cool. You know, you're ready for a little pullback. That's fine. Nothing wrong with carrying a little bit of a negative delta. Back to yearly hedge allocation, and I think I mentioned in a previous video that I'm gonna adjust the calculation slightly right here, yearly target premium, not I'm sorry, yeah, yearly target premium, and then the weekly target premium is derived from the yearly one. And if you remember, this number is based on our target CAGR, estimated PCR, and a yearly hedge allocation. So when you combine all of that, there's a certain amount of premium that we need to sell and continue to achieve this CAGR once we account for the payout for the hedge allocation. And I used to have the same formula for both the CAGR and the yearly hedge allocation in order to sell the premium. I just adjusted it slightly down so that we need to sell proportionally a little bit less premium to cover for this hedge allocation, and that allows me to move up the allocation a little bit without moving the yearly target too far. But maybe that's a subject for a full separate video in a mastermind session or something. I don't want to go off track too much here. But anyhow, this is what it is. Weekly hedge budget at the moment is $88, and today is Friday, our hedge day. So we'll do both. We'll do a trade and we'll do a hedge as well. Let's start with a trade. And to do that, we just go to our platform, open MES, go to trade, and obviously the MES has a little bit less expiration, so sometimes it might be a little bit tricky. The next one over 90 could be a little bit too far, and this one here could be too low. So it's a little bit of a balance. But I think if you're in MES, maybe we can just stick to closest to 90 days, and that should do it. So right now here I would prefer 84 over 118. If 118 was a little bit down, maybe 110, maybe we'll go that. But either way, it's not a big deal. If you want to stay a little bit further away, go 118, no problem at all. And so let's go to our 11-12 delta and see what we can get there. Right now at 4,700, we're getting 24.75. And remember, I said I was going to do 3 of them. So that's 371. And that's fine. We could do that, or we could go a little bit higher and get this here. So let's go with 12 delta, and let's see if we can collect the full. Let's actually, there's no rush. We can just try once and see if we can collect. We'll probably not, but it doesn't hurt to just run it once. We're gonna replace this one, go down, and all right. So now let's just use a calculator a little bit to make sure we are allocating correctly. So we got 26.25 times 3 and times 5. See, we collected 393. So we shouldn't spend more than 78. So $75-$80 on our put debit spread. And given that we only did 3 of them, we should probably look for 75 wide. And we can go back to 84. And let's go here to 34 and see what we get for 75. So that's a tad, a little bit high. So we're gonna go a strike down. Remember, this doesn't have to be strictly 35. I mean, so long as we are in the neighborhood, between 30 and 35, I think that's just fine. And I think if we go here 75, pay this amount, then we are within our planned spend. Maybe we'll have to up it up a little bit, but again, let's just try and go once and see if we can get it. No, so we're gonna go here and replace, and we'll pay just a little bit more, and that's now closed. And with that, we can go ahead and record the trade. So we'll go to naked puts. This is gonna be 47, and it's gonna be MES, and today is this. So for naked puts, we got, I think 4,700, no, 47.25, 47.25, and it was 80, it was 84, I think. oops, 84, and then we go to 50.25 on, oh, I'm sorry, 26.25, 26.25, and we did 3 of them. And let me just confirm that that's correct. 26.25, yeah. And then we got 50.25 here on the put debit spreads. We just go MES. We got 48 and 50.25, and then 49.50. I think it was 84 days, and we paid 16. Was it 16.5? Let me just see. 16.5. Okay, so let's collect that. We done we did 1, and this is now filled. So here we're getting $375 worth of potential protection, and we're looking good there. We're looking good here. We closed some of these. You'll notice here I closed this one at 59. It was towards the end of the day yesterday, and it was like 10 cents left. And I figured, I'll just close it for 8 instead of 7, waiting for 7.9, just in case the market turns down today. There's no point of staying in the trade for several more days just for for 10 cents. So I did that. I closed that. So now we are left with 3 ES trades and 5 MES and 3 MES. And when we combine all of that, when we take a look at the premium here that we collected, which is 394, the last premium, with the new net lick with the numbers here, we are left with another trade on Tuesday. So this is nice. Gives us a couple of days, and we do another trade. So I'm assuming the following will be on Thursday. So you see, we get to mix the days and mix everything. So it's going to be truly average of what market gives us. And the notional exposure is pretty good at 6x. And I really like that. That's as low as if we've been recently, I think. So that's good. And then let's take a look at the hedges or semi-hedges. So we have these little 2 semi-hedges going on. And remember, we're rolling them after 7 days. And we're running a little experiment still just for cost. Maybe we'll do another week just to see if there is much difference in the cost. But we already decided that the 14-day is the stronger one. As a matter of fact, we might just go with the two 14-day hedges, as we decided that was better. And let's take a look. So, oops, no, sorry, it's right here. So we have these 2. If you take a look at this one, and if we just go to close this just to find it real quick, it's gonna be right here. So as we're planning to open another one, we could just leave this one, but that's not ideal. Well, at least it wouldn't be consistent, because we want to stay consistent, we're going to go to the top 1 delta, which is higher here. So we'll do that. We'll probably just close this one and reopen them, record, and then reopen 2 of them over there. So let's just close this one for 90. If we can, we'll leave it. Well, I don't think it's gonna get there, so we're gonna have to lower it down. Let's just go ahead and close it at 85. This is gonna close pretty sure. And then let's do this one. Close position 45. So it's probably gonna be no, same thing. It's not gonna close, but let's try. And replace. Any questions, guys? Feel free to unmute. And how do you like the new Delta? I see in the Discord that a lot of people are closing some naked puts, which is good.
My question to you, Victor, is how did you decide on selling 3 rather than something else? What was?
So basically, once I moved from ES to MES, there is no more advantage in selling 5 versus 3. Like there is no cost advantage in in commission and fees as it would be moving from MES to ES. Then there's a significant difference that should be considered. But once I've decided to go to 5 MES strikes contracts, then the commissions are same per strike whether I do 5 or 3. And doing 3 just gives me an opportunity to do more trading, and I want to do some more of these live trading sessions, and that's why I figured, okay, let me do some of them, three contracts. But there is no huge difference I mean, I can easily switch back to 5 and then stay with that. But then that would give me probably less trades per week, if you will. But there is no reason not to do it 5, especially if you like to reduce your trading down to one per week. Then what you would do then once per week, you would just take a look here at your target weekly target premium, and then get an instrument that gets you close to that. And in that case, you can maybe even elect to go, in my example, I could elect to go with an ES to save on commissions, go with an ES, and then maybe do this week on Tuesday. Then this is going to be I'm going to collect a little bit more, so maybe next week would be on Wednesday. It would be an extra day in between. That's fine too. It would still be considered once per week, but I could do that. But again, I really want to do more of these live trading sessions, so that's the main reason.
Okay.
I wanted to go back to here, and we'll put 2 of those semi hedges, because I think now with this new allocation of $88, we should be able to squeeze 2 of them. We'll see if it's not feasible, if it becomes too expensive, then maybe we'll switch to one plus harvesting some shorts. But for right now, let's go ahead and open the 2 of them, go to 14 days, go to top or close to top 1 delta. So anywhere where we have a good strike, like here, it's this one is busier than this one, so maybe we'll do this one. More open interest, as you can see here, open interest. And that surprises me, because usually it's in increments of 25 that are preferable and have more open interest, like 50s. But in this case, it's not the case. So let's do 2 of these. And again, it says here that it's $450 max loss, which would be if we go all the way. But that's I'm sorry, something is showing off here still, so I have to delete. Something is showing. Let's try again. 14, because the max profit was $100 and something, and that's not correct. Let's try again. Now it's better. Yeah, I was like 400. That's I sold it. I'm sorry. I had the I had the red here and I didn't pay attention. So quantity 2. So we're doing 135. Again, we're going to recoup some of that cost in 7 days. So it's probably going to be within our target. Let's try 135, see if we can get it. Probably not. We're going to have to up a bit. So let's see. Okay, that closed. So now let's just properly record all of that. And first, let's close these. The one that was 43.80. Let's see what we got for it. We'll go here. And then 43.80, we got 85 cents. 43.80, we got 85 cents on this date. Okay, so it ended up costing us $55. And for the other one, we got 40 back. So 4, and it's funny, the same cost, 55, 54.50. That's with commissions and fees. And then we opened new one. We're gonna call it wrong put. It's in ES. We opened it today, and we did it at 45.80, 14 days, and oh, I need to account. Oh, they're right here. It's 2 of them, and it was 1.4, I think, as well. And incidentally, that's the same cost as we paid last week for this one. So there's a pattern emerging, so we can keep an eye on that. But if this holds, then we have a good idea of how much the hedge will cost us. And what we've done is notional values. This notional value shouldn't be here like this. Something is wrong. So I have to work. Something is wrong with this formula. So let's see. Okay.
Yeah,
I'll
the
work on
strike is wrong. Yeah, the strike was wrong.
Oh, the strike was wrong. Where is? I'm sorry.
If you go back to the
The hedges.
yes.
Oh, 45.80. Thank you very much. Ah, that's more like it. All right. So there you go. So that keeps us under 6-to-1 ratio, the leverage. Okay, so that's it. We are done as far as the trading goes for today. We're gonna finish this up and we'll go to mastermind session. Is there any questions while we're here? Well, if not, then I will see you all on Tuesday for a new live trading session. Those on YouTube, please like and subscribe and come to our Discord and participate in these sessions. Have a fantastic weekend. Bye.